This is Rome, the 80s before Christ, 80 BC, the place where all the economic power, all the trade routes, and all the political decisions of the world were centered. It seems incredibly difficult to get rich from nothing here, much like in today's major cities. However, this city, which looks magnificent from the outside, is also full of wooden buildings that can catch fire at any moment. It is a chaotic, unstable place. This uncontrolled environment of chaos, while ending thousands of lives, also creates life-changing opportunities for others. This is you, Lucius. From the outside, you look like an ordinary bargainer standing in front of the flames. But you are a former slave who has won his freedom and is rapidly advancing toward becoming one of ancient Rome's greatest investors. Right now, you possess an educated, fast, private fire brigade made up of talented and disciplined slaves under your command. You are negotiating with the man who is about to lose his assets in the fire to stop this disaster. You will win this negotiation. You will acquire this property by leveraging the panic caused by the fire, obtaining it for a price far below its true value. You will be rich by the end of this video, and you will fully understand how you could rise from nothing to wealth in ancient Rome. More importantly, the lessons we derive from this story will put you one step ahead even in the uncertain, volatile, and risky economic environment of 2025. Because the psychology of the wealthy is the same in every era. The issue is not the conditions or the environment, it is your perspective. Because no matter how advanced we become, fundamental economic principles such as crisis management, venture capital, asset speculation, and arbitrage still derive their roots from ancient Rome, even if technology changes. We will simplify these lessons and show you how to apply them to your life. But first, we must see the very first step that formed the foundation of this wealth. How Lucius started from nothing, and how, as a slave, he created his own power and capital. Our story begins when Lucius was a slave to an Argentarius, a banker. Lucius was very fortunate. He used his mental skills instead of physical strength in the fields. He was his master's most trusted accountant and cashier. This was his greatest asset, skill and trust. Possessing these intellectual abilities was much rarer and more valuable in an agrarian society than owning a field full of land. In the modern world, we call this directly human capital. That is, the triad of knowledge, skill, and experience you possess. Lucius knew that the more he earned for his master, the more trust and privileges his master would grant him. This high performance and trust earned him a new title, Peculium. Peculium is a small amount of money that a slave was permitted to manage personally with the knowledge of their master. You can think of it as the slave's own personal savings, their micro-budget. This was Lucius's seed capital. So, how did Lucius grow this small capital, this initial budget? Simply, arbitrage. Merchants came from every corner of the Roman Empire. Silver from Spain, gold from Egypt, copper from Gaul. The currencies of different provinces held different values, and the exchange rate of these currencies against the Roman denarius constantly fluctuated. Because Lucius worked at the bank, he could analyze the price differences in this chaos before anyone else. Lucius caught the small differences in the exchange rates of different provincial currencies. For instance, when a merchant from Gaul came to exchange money at a rate lower than the bank's official rate, Lucius immediately purchased that currency at the low rate, using his own personal savings. Shortly after, he sold it to another Spanish merchant who needed the same currency at a higher rate. This buying and selling difference represented a net profit, a kind of risk-free return. This is one of the most fundamental trading principles in today's economy. Let's bring this to 2025 and think simpler. Arbitrage is when a product or asset has different prices in different markets. What Lucius did was currency arbitrage. You can see this today in 1. Crypto arbitrage. This is similar to profiting when a cryptocurrency is priced at $1,000 on exchange A and $1,005 on exchange B. You buy on A and sell instantly on B. Lucius used these small, momentary differences in the denarius rates across different provinces. 2. E-commerce arbitrage. This is similar to buying a product cheaply from a local wholesaler and selling it on a large platform like Amazon at a higher price, thus profiting without risk. In today's financial language, this is directly known as currency arbitrage or high-frequency trading, HFT, with small margins. Lucius earned little on each transaction, but he performed thousands of them, building those small margins into a mountain. The accumulation of small profits created a compounding effect. Thanks to years of micro-arbitrage and his accounting skill, Lucius managed to save the required price to pay his master for his freedom, which is called the price of manumission. This process is called manumissio. Lucius was now a libertus, a free citizen. Being emancipated from slavery was not just a social status change for him. It also meant freedom from corporate governance risk. Being a slave to a banker meant risking the loss of all his assets if the banker went bankrupt or if his master changed hands. Freedom meant taking all risks under his own control and having unlimited growth potential. The freedom to start his own business was now his. When he was emancipated, the amount remaining in his pocket became his initial capital, and this capital was entirely created by his own intelligence. Lucius was now free, and he knew how to multiply his money, the service sector. His first investment was establishing a small but highly capable customer relations and security team made up of his former slave friends. Everyone in Rome wanted the safety of their possessions and their lives. Lucius's slaves came from the system of their former master, meaning they were disciplined and reliable. This created a rapidly spreading brand trust. People began entrusting their possessions and their families to Lucius's team. Because Lucius was a man who had risked his freedom, his commitment to his work was unquestionable. In modern language, we call this entering a high-reliability niche market service with low barrier to entry. The sector was security, but the main product was reliability. People trusted his word more than the service itself. Lucius's next move was to transform from an ordinary service provider into a real estate investor. There was a housing shortage and high rents in Rome. He could see the city was growing rapidly. Lucius acquired a small, crowded insula, an apartment building, for a very low price in exchange for a debt, as it was in disrepair. The value of real estate is determined not by its current state, but by its future potential. Real estate always gains increasing value. His slaves repaired and rented the property he purchased. This was a very important turning point in Lucius's life. Passive income. He had created an asset flow that generated money even when he wasn't actively working. This was the Roman version of the modern financial principles of portfolio diversification and low-risk return. His service income covered his living costs, while his rental income financed his growth. For those looking to generate passive income in 2025, this is similar to buying dividend stocks, selling digital products, or investing in a small real estate investment trust, REIT. The goal is to earn money without trading your time. However, there was one major risk in real estate investment in Rome: fire. The buildings were wooden, attached to each other, and disaster was inevitable. Every fire left hundreds of people homeless, wiping out their assets completely. As Lucius watched this chaos, he recognized a great genius, Marcus Licinius Crassus. Crassus had turned the fire disaster into an organized business model and a monopoly opportunity. What Crassus did was not just putting out the fires, but acquiring properties in crisis at disaster prices. Lucius saw the potential of this model and decided not only to imitate Crassus, but also to optimize it. Lucius took this idea from Crassus, but he established a structure that was more agile, smaller scale, and faster. He trained his slaves not only in firefighting, a kind of damage control, but also in rapid asset valuation and instant legal transaction. These slaves were not ordinary laborers. They were Lucius's multi-purpose disaster response team. Their strength was not muscle, but the advantage of timing and knowledge. In Crassus's shadow, Lucius had established his own small but lethally effective risk management and acquisition unit. This strategy was similar to how private equity funds buy up distressed companies cheaply during crises and restructure them in 2025. Lucius competed against the sluggishness of a big corporation with entrepreneurial agility. Lucius's entire accumulation of savings, education, and experience was ready for this moment. The merchant across from him was about to lose his assets. All his capital could turn to ashes in a few hours. It is in these moments that people stop thinking rationally. The fear of loss. One of the most fundamental principles of behavioral finance causes people to make irrational decisions. The merchant has lost his capacity for rational thought. All he sees is loss, and his only desire is to save something. Lucius, on the other hand, is completely rational and calculating. He sees the value and measures the opportunity. Lucius's trained mobile consultant approached the merchant and offered a deal. "We will put out the fire immediately, right now. But in exchange, you must transfer ownership to Lucius not just of this burning shop, but also the 2 adjacent warehouses that the flames are about to reach. The price of the offer? 10% of the normal market value. For the merchant, this meant a 90% loss. But not selling at all meant a 100% loss. This was an opportunity cost calculation. The merchant weighed the risk of losing everything against the opportunity to save the 10% of capital he had left. Lucius, on the other hand, saw the opportunity to acquire high-value real estate at a 90% discount. This is how crisis investing worked in ancient Rome. The merchant sold. Lucius's team extinguished the fire. The property transfer was quickly finalized before the disaster was even over. After the properties were transferred to Lucius, the second phase of investment began: value addition. His slaves cleared the rubble and not only repaired the buildings but also made them safer, sturdier, and more attractive for tenants. This was a kind of repositioning and value enhancement strategy. The housing shortage continued in Rome. Lucius managed to sell these 3 properties even above the old normal market value because he had eliminated the fire risk and upgraded their quality. Lucius's return on investment, ROI, was extraordinary. He had earned nearly 30 times the profit in a short time from an asset he acquired at a 10% price. This triumph had transformed him from merely a wealthy libertus into one of Rome's most powerful real estate players. The crisis had become Lucius's biggest financier. With this capital, Lucius was now ready to lend money. enter political alliances, and join the equites, Rome's highest economic class. Now he was the money itself. Here are the 3 fundamental economic lessons we can draw from this story. First, arbitrage and passive income generation. Despite the disadvantage of having been a slave, Lucius started with small amounts, but used risk-free arbitrage and then created a passive income stream with insulae. Application to 2025. You don't need big money. You need knowledge and speed. Catching small price differences on the stock market, buying products cheaply from a wholesaler and selling them higher on a large platform, e-commerce arbitrage, or generating automated revenue from a digital product, e-book, online course. These are Lucius's insular rent and currency arbitrage. This means growing capital slowly through low-risk steps. Secondly, crisis management and behavioral finance. Lucius's main profit came during the greatest crisis in the market, when everyone was terrified of the fire. This is entirely a lesson in behavioral finance. Application to 2025. When financial markets collapse, stock market crash, rapidly rising interest rates, everyone starts selling. Panic is the worst investment advisor. What Lucius did was use the cash capital he had to acquire distressed assets during these panic sales. Today, this means buying stocks during a panic sale, or buying and repairing distressed real estate. Remember, the person who buys when everyone else is selling has seen the opportunity in the crisis. Lucius made rational calculations instead of emotional reactions. Thirdly, human capital and trust. Lucius's background as a slave taught him discipline, accounting skills, and reliability. The core value of the service he founded was speed and reliability. His firefighters were multifunctional professionals who knew legal procedures as well as firefighting. Application to 2025. In today's economy, specializing in only one field is not enough. Like Lucius, you must be a T-shaped professional who combines multiple niche skills: accounting plus construction plus crisis management. When starting your own business, your greatest assets must be brand trust and service quality. Lucius's speed and discipline were his biggest advantages in the competition. These 3 lessons, creating capital with knowledge, staying rational during a crisis, and providing reliable service, will put you one step ahead in 2025, just as they made Lucius wealthy in ancient Rome. Remember, the history of money is actually the history of seeing opportunities.